There's an old saying that I love, and you've probably heard it too, and that is, your actions speak so loudly, I can't hear what you're saying. And I think that's really true when it comes to trading, and here's why. I could talk about being bullish and bearish. We could talk about macro implications. We can go down the rabbit hole of earnings and tariffs and everything else, including yield curves. But the bottom line is, with what you and I do, we're traders. We're not really focused on years from now necessarily, although that is one aspect of my trading, focusing on position trades, which we are actively building. But most of us are swing traders. So let's define that. Overnight trading, for me, following trends preferably, or at least clear directional bias where follow through can help grow the premium that we've bought. And also maybe a 2 to 10 day time horizon. So there's some overnight exposure. These are the trades. In fact, what I'm sharing with you right now on the screen is the trade alert recap. It's a recap. So this is on top of the setup alerts that I send out to the members. So today, our trade alert is going to look like this. Our open swing trades continue to be gold, Walmart, and again, Walmart. All of these have been scaled out. Let's talk about the importance of the scale out for a moment. All three of these trades right now are in the green. And we've done what we have to do to skew the risk reward ratio in our favor, which is pay ourselves when we can, not when we have to. That's the T1. And then move the stop to a break even. Now, in the case of GLD, we have a tightened stop or a trailing stop, however you want to call it. And we're locking in profit because, well, two things. One, this trade is at this point trading around $2,000 per contract, and it expires on the 25th. So I'm rapidly running out of time. So I'm managing not only price, but we're also, as options traders, managing a depreciating asset. Now, I do have a new swing trade that I put on today. That is the May 16 188 put in the IWM. And I closed out a trade. And I want to talk about this a lot here in this video as well. This is a loss. And this is a pretty typical loss for what we do in the mastery. Let's talk about losses, because this is my favorite topic. I bought an option for $2.30. I'm not risking 100% of that $2.30. In fact, I'm going to know I'm wrong. I'm going to know that trade is no longer valid long before I risk the entire premium that I paid. And you can see I closed this out at 170. Here's what's really important. Let's talk about a trading truism that we say a lot, but maybe we're not internalizing the way we need to. The idea of successful trading that leads to account growth. I don't mean a home run here and there. I'm talking about consistent month after month, quarter after quarter, year after year account growth. So one year you might be trading a $5,000 account. The next year, hopefully you're trading an even larger account. And so your overall P&L is growing while at the same time you're trading a larger account value. That's what we're all after as for account growth and as traders. But the way we do that is cut your losses and let your winners run. Well, everyone's heard that, I'm sure, but this is the living embodiment of that. Notice how we are letting our winners run. This is a $485 option that will likely be closed for no less than, very likely, about $1,700 to $1,800. Right? That's darn near quadrupling, and I'm speculating here because it's right now trading at about $2,000, $1,900 a contract. Walmart, right? Gain. Again, Walmart, almost doubling, $2 profit or so on that. But notice when I lose, I'm losing about 50 cents. So this brings up a really important part of trading. And I know this isn't necessarily the typical charting update that we do, but this is really what trading is. Cut your losses when you can, not when you have to. And what that means here is, look at how much I lost. I lost 50 cents on this trade. Am I upset about this? No, because my most recent scale out, as you can see with here, was for $1.90. And if Walmart can continue moving higher, as some of the other trades that we have are doing, I can continue to scale out at greater and greater profit. But if I add to losers, if I take my winners too soon, account growth is all but impossible, right? So a little bit of a different take on today's video. You can see here, if you want to pause the video, these are some of the basic rules of what I think good swing trading is. I trade in a cash account. These are all long calls or long puts. And so I don't have pattern day trading rules to deal with. But this is really the part of trading that we need to all focus on. It's the numbers. Crunch your numbers. Know your numbers. There is a math to account growth. In fact, notice I'm not talking about win rates, because win rates are only as useful as talking about average winners and average losers. Without that metric along with the win rate, it's a vanity metric. Realize that you can have a 60% win rate. You can win 6 out of 10 times. And if your winners are smaller than your losers, you can still lose money in your account. And I think when we're dealing with high volatility, this is a really important topic to focus on. This also focuses on, okay, Rag, you want to get long gold. You've been focusing on gold miners, Walmart. Yes, you can add Coke to that list as well. And then everything else, I'm actually looking at some puts to set up in the mastery right now. So I hope this is an interesting and helpful walkthrough, a little departure from what we normally do. But Monday through Friday here at the Simpler Trading YouTube channel, you can join me for Charts and Coffee. And for 20 minutes from 9 to 9:20 Eastern every morning, I take your questions and I go through what is on my radar for trades. So let's supplement those conversations with this number crunching. And so we can put a really holistic trading plan together. This is the kind of year that if you can manage is going to absolutely pay dividends to you as a trader, because if you can manage price action like what we're seeing in Q1 and into Q2 of 2025, most type of market environments are going to be absolutely a walk in the park for you. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.